Feeling the crypto market jitters and wondering if the party's over for this bull run? Step 1. Let's analyze the price action on major cryptocurrencies like Bitcoin. Look closely at the daily and weekly charts. Are prices consistently failing to make new highs, or are they breaking below significant long-term support levels or established uptrend lines? A clear break of a long-term upward trend can be the first major signal that momentum is shifting downwards. Watch for patterns of lower highs and lower lows forming. Step to gauge the overall market sentiment. Tools like the Crypto Fear and Greed Index can be helpful. A sustained period shifting from extreme greed towards neutral or fear might indicate that bullish enthusiasm is waning significantly. Step 3. Examine the trading volume accompanying price moves. Are significant price drops occurring on high trading volume, while price rallies seem weak with low volume? Strong selling pressure confirmed by high volume can suggest conviction behind the downward moves. Step 4. Consider the broader context, including macroeconomic factors and major news. Are there new significant regulatory pressures emerging, changes in interest rate policies, or global economic uncertainty that could be spooking investors away from riskier assets like crypto? Remember, no single indicator provides a definitive answer. Combine these checks: Euro price trends, market sentiment, volume analysis, and the macroeconomic environment, Euro, to form a more informed perspective on the potential end of the bull run.